and welcome to this Moneycontrol live stream. It's a Thursday morning and you're watching Morning Trade with me, Nandita Khemka. Over the next 30 minutes, we'll be talking about the cues for trade, all the earnings to watch out for in today's session, and some earnings that trickled in after market hours yesterday, and what the street verdict is like on Maruti after the kind of performance it handed in the fourth quarter. And if you have any stock-related queries, as usual, send them in to us on our YouTube feed, and we'll have them addressed by our technical expert Ruchit Jain on the show later on. But before we do all that, let's take a look at the top headlines at this hour. Wall Street ends mixed as the Dow and S&P 500 correct, but a post-earnings rally in Microsoft leads the Nasdaq higher. Shares of Meta also surged a whopping 12% after hours amid earnings beat and better than expected guidance. Meanwhile, Asian markets have opened largely lower. The SGX Nifty is also hinting at a weakish start for the Indian market. Crude prices slip over 4% with the Brent trading around that $78 a barrel mark. Now this despite a larger than expected drawdown in US inventories. In fact, persistent recession fears are clouding demand outlook for oil going forward. Bajaj Finance's net interest margin contracts on expected lines in a stable fourth quarter show. Profit jumps over 30% compared to last year. And among key earnings today, gross margin expansion and 5 to 6% volume growth is seen from FMCG giant HUL. Muted revenue growth is expected from Wipro and Tech Mahindra, while a one-off 11,600 crore rupee provision for the Citi acquisition is something that may result in a loss for Axis Bank in the fourth quarter. Well, with that, let's quickly get on board our technical expert for today. Ruchit Jain of 5paisa.com is joining in this morning. Good morning, Ruchit. Good to have you on the show. Well, yesterday it was a seesaw session, but the good part is that we managed to end above that 17,800 mark. But this morning, again, SGX Nifty not giving out all those, all that encouraging cues. But what is the kind of support level that you'll be watching out for on the Nifty if it breaks below 17,800 in today's session?
Yeah, hi, very good morning, Nandita. Firstly, thank you for calling me on your show. Well, Nandita, it's a very important day being an expiry day. And if I talk about this entire month, what we have seen in the derivatives data, we started this series, the April series, with very huge short positions. In fact, if you look at FIS data, then FIS had about 90% of the positions on the short side, and only 10% of the positions in the index future segment were on the long side at the start of the April series. But what happened that when market crossed that 17,200 with a gap up opening, so 17,200 was the earlier resistance in the month of March. And when that was crossed at the start of the April series, the FI started unwinding their long positions. Their long short ratio, which was around 10%, has slowly and gradually improved to around 45% now as on yesterday. So this clearly indicates that the shorts are out of system. They have reduced their short positions. In fact, they have even added some decent amount of long positions in last 1.5 weeks. And we can see that the markets have also been going up along with the participation from most of the sectors, except IT, where short formations were seen after Infosys results. I think most of the sectors have seen long build-up. And we have witnessed from the cash market segment that the broader markets have done quite well in last 1.5 weeks. So price up move supported by broader markets participation is certainly a good sign. I think even for today's session, what we are witnessing a minor dip if we get during the opening hours, then 17,740, 750 would act as a good support for the market. So the downside as of now seems to be limited. The technical structure is positive as well as the derivatives data is positive. So based on the data, I don't think one should take any contra trades over here. Even yesterday we saw that the first half an hour witnessed some selling pressure in the Bank Nifty index, but it managed to recover quite well during the later part of the day. So I think the biasness remains positive based on the data. Any declines towards that 17,740, 760 range in opening today should be used as a buying opportunity. The highest open interest, if you look at all the options, is in 17,700 put. So today, I don't think the market will expire below 17,700 considering their put options. So keep a stop loss below that 17,700 and go long around 17,750 for intraday today.
Right, so those are the levels to watch out for. But let's also talk about Bajaj Finance. That according to me, would be the stock of the day because it will be reacting to its earnings. Profit has jumped 30% on a YOY basis despite higher loan losses and provisions. In fact, NII has grown at a stable 28% or thereabouts, and new loans booked That has also gone up 20% or so on a YY basis. Margins have contracted somewhere around 30 basis points, but that was widely expected on a QOQ basis. And asset quality has seen an improvement. If you look at the brokerage call on the stock, Morgan Stanley has an overweight rating at a target price of 8,000 rupees a share. And, it says that consensus estimate revisions are positive and all the return ratios are looking good. And, the levers to improve growth are in place. What would your call be on Bajaj Finance, given the fact that, it has underperformed Nifty on a YTD basis, and last year also it had underperformed the broader index? How would you play this stock now, given the fact that it has reported good set of numbers in the fourth quarter?
So I think largely the price-wise corrective phase is over for the stock. We have seen that last 4 or 5 months, the stock has already seen a decent price-wise correction from the highs, and what we have seen in last 15-20 days, some pullback move has been seen from its lower levels. So importantly, 6100, 6120 is the resistance, and exactly the stock is trading near those levels. And yesterday's high was around that 6120, which is the 89 EMA on the daily chart. So once we see a breakout today, post that results, if we see a move above 6120, I think that would bring a lot of buying interest amongst market participants, because the stock is available at lower levels compared to what it was trading a couple of quarters ago. So I think the biasness looks positive. I don't think that the stock would see any kind of significant downside from current levels. As far as stock is concerned, 5,900, 6,000 is a very good support range for the stock. So one can look to buy the stock with stop loss below 5,900, and once that 6,120 level is crossed, then I think 6,300, 6,400 range should be expected in the short term.
Right. We also had a query on this talk from Satish Kumar. Satish, hope this answers your query, and you can watch out for the levels that Ruchit has just mentioned. Aside of that, let's talk about Axis Bank. This company will be reporting its earnings today. It will swing to losses in Q4 on the back of the 11,600 crore provisions for the Citi merger. And, that will weigh on the fourth quarter earnings per se. But NII growth is expected to be the best in 8 years, if you look at the polls that we are putting out. And asset quality is expected to improve on a quarter-on-quarter basis. How should one position themselves in Axis Bank ahead of the earnings? And what are the kind of levels you'll be watching out for in this counter, Ruchit?
So frankly, I think the provision which they are going to make is already been factored in the market, because market participants know quite well about that. And the stock relatively has underperformed. If you compare it with HDFC Bank, ICICI Bank, even Kotak Bank has managed to show some good pullback move in last 1 month, but Axis Bank has shown a more time-wise correction or sideways move in this last couple of weeks. So I think most of the things have been factored in, unless we get any kind of shocks in the figures, the stock won't react much negatively. So 900 to 840, 850 is the trading range as of now for the stock. So next directional move would depend on in which direction does the breakout comes. So I would advise that if one has to take long positions or fresh positions, so better to wait out for the numbers to come out. So once after numbers, in what direction do we get a breakout, whether 850 gets broken or 900 gets reached on the high side, I think that will give some more clarity on the next directional move for the stock.
Right. That's the call on Axis Bank. Let's also take stock of the brokerage of the day. That's on Maruti. Couple of good brokerage calls coming in on this company after it reported an okay set of numbers, a tad below estimates, but it wasn't all that bad looking at the numbers. So Morgan Stanley has an overweight rating with a target price of 11,155, and it expects company to grow ahead of market in FY24. Looking at Jefferies, even that has a buy rating with a target price of 11,000 rupees a share. And, it does believe that the chip constraints may limit production, especially in Q1. Remember, it has also announced capacity addition plans to the tune of 1 million units, given the fact that there is a steady demand and export demand as well. So, looking at the stock, it has kind of lost somewhere around 3% on a 5-day basis rather. The brokerages have kept a target price of 11,000 on the stock, and right now it is trading around that 8,500 band. Do you expect this level to be achieved, or the company to move towards this level in the next 6 or 8 months?
So I think yes, it can move towards at least 9,500, 10,000 mark, but one needs to give up a sufficient time for that. So from a very short-term trading perspective, 85.50 is the resistance for the stock, and once it moves above 85.50, then we could see some good momentum. But of course, I think that for stocks like Maruti, one needs to keep some mid to long term view rather than just from a short term trading perspective. So one should keep a view of at least 12 months or 18 months for good returns to play out in the stock. So overall, the auto space have been doing well. Off late, we have seen the even two-wheeler names such as Bajaj Auto, TVS Motors delivering good returns. Even four-wheeler space, we have seen that stocks like Tata Motors, Mahindra and Mahindra have seen some good buying interest. So I think auto as a space is likely to do well over next 6 to 12 months. So if one has a horizon of at least 6 to 12 months perspective, then certainly Maruti could give good returns from where it is right now.
All right, things looking good for Maruti going forward. And we also had a query from Rajiv Tibriwal on Maruti. Hope that answers your query. Let's shift gears then and talk about the FMCG pack, given the fact that HUL will be reporting its numbers today. We have joining us this morning is Kaustubh Pawaskar of Sharekhan to share his expectations and what he expects from HUL from the fourth quarter earnings. But before I come to HUL, good morning, Kaustubh. Good to have you on the show. Let's talk about Nestle and Tata Consumer. Good set of numbers coming in from Tata Consumer, both on international margins as well as domestic business doing pretty well. What is your outlook on these two stocks after the kind of earnings they have handed in for the fourth quarter?
See, both the companies posted a strong set of numbers, better than what we and Street were anticipating for the quarter. Important factor over here is that sequential improvement in the sales volume of their key categories. So that also we have seen. We have also seen that EBITDA margins were better than what we and Street were anticipating for the quarter. And both the companies in their outlook, they have mentioned that now they are seeing margin pressure to be receding because commodity prices are falling. So they expect better margins to, picture ahead. Also, in terms of volumes, they have taken the required pricing actions, and if commodity prices corrects further, they would be focusing more on improving their volume growth. Especially for Tata Consumers, they have their drivers in place. Growing businesses are doing extremely well for them. The domestic business, which almost contributes around 70% of the revenues, is consistently growing for the company. And we have seen also in the key branded tea business, their sales volume improving sequentially. Now over here, the important would be to regain the lost market share, and which will help them to achieve mid-single digit kind of a volume growth in the medium term. So they have their strategies in place. We should expect double-digit kind of a revenue growth, and we should expect even volumes to, margins to improve for Tata Consumers in the coming years. And they have a strong cash balance of around 2,900 crores, which they can utilize for their organic and inorganic initiatives. So valuation at around 40 times FY 25 earnings, I think, stock is valued, at a decent valuations. So one should look, at acquiring, buying the stock from the medium to long term perspective. And Nestle as well, we believe that company's performance was quite well. Out of home categories are performing extremely well for them. In rural markets, the deepening of penetration is helping them to achieve strong growth in rural market as well. So we believe that they should continue and their volume should improve in the quarters ahead. However, this important over here is the margins, because milk prices have gone up significantly. So it will continue to have some bit of pressure on the margins in the coming quarters. However, if milk prices stabilizes from the current level, we might see margins sequentially improve for Nestle as well. So that is something which we need to monitor. We have a buy on Nestle as well.
Okay, great. Buy calls on Nestle as well as Tata Consumer. Let's now come to HUL. Our poll throws up somewhere around 11% profit growth on a YOY basis, revenue growth of somewhere around 13.5%. What are your own expectations, and what about volumes? We are expecting it somewhere in the mid 5 to 7% range. What are the kind of volume growth that you're penciling in for HUL, and which segment do you think will drive earnings for HUL this time around?
So we are also expecting around 13% revenue growth for the quarter, and a PAT growth of around 10%. We are expecting volume growth of around 5% for the quarter. So over here, home care business like detergents and it is expected to grow by around 20%. Personal care is expected to grow in double digit. So these are the categories which will, and large part of the growth would be a price-led growth. We have seen company, taking price cuts after decline in the palm oil prices and some of the key commodities. So that should help volume to sequentially revive. But we believe that 5 to 6% kind of a volume growth is expected in quarter 4. And important for HUL is revival in the rural, market. So that is something which will help HUL to see their volume growth improving further. So this quarter we have seen there some bit of momentum in the rural markets, but it is not enough to see their volumes coming back or improving substantially. So volume growth is expected at around 5%. And the revenue growth is expected around 13%. And on category front, home care and personal care, both these categories would drive double-digit growth for the quarter.
Right, Kaustubh. We are actually a little, we're running out of time, but I want to club two questions and ask you about the margin trajectory, given the fact that the royalty payment to parent has increased and that will have an impact on margins and higher ad spends as well. And secondly, Rohit Java will be taking over from Sanjeev Mehta in June, right? So the kind of challenges that he faces, some of them are, the slowdown in rural demand, the disruptions coming in from new age D2C brands. So what are the kind of challenges or what is the kind of change in strategy do you expect this transition to bring about for HUL going forward?
See, talking about margins, so this quarter we are expecting around 50 crores kind of an impact because of the increase in the royalty charges. So we are expecting operating margins to be lower by around 50 bips for the company. Gross margins would also be flat, kind of a flat. We should expect sequential improvement in the gross margins and the operating margins. Also, we have seen advertisement spends. Company has been continuously spending higher on the advertisement spend, so that those are also expected to remain high. So that's why we are expecting a PAT growth of around 10% for this quarter. Asking specifically about the transition, I think in the under the tenure of Mr. Sanjeev Mehta, we have seen company doing extremely well, margins improving substantially. We have seen they had their strategies in place, including premiumization and entering into the new categories, innovation, so that those help company to achieve strong revenue growth in past 10 years, and the margins consistently improving. So under Mr. Rohit Java, we expect similar kind of a trend to continue because HUL has strong portfolio of brands. Mr. Java already has a strong experience in the key markets. So I think definitely there would be some revamping strategy, but it will be supported by the strong portfolio what HUL have, and we expect this portfolio to continuously expand with the parent support. So I think that market share gain or premiumization, that would be the key focus area for the company, and I believe that that should continue ahead.
Right. Kaustubh, with that, thanks a lot for taking out time and putting things into perspective and telling us what to expect from HUL going forward and sharing your thoughts on the entire FMCG basket. Well, with that, let's go back to Ruchit and get in some queries addressed by him. We're getting a query on Dabur from Mr. Marcus Hunlang, and he wants to know your thoughts on this company, given the fact that we were just about talking about the FMCG basket. Looking at Dabur on a YTD basis, it has lost somewhere around 20% or thereabouts. Coming off its 52-week lows, how should one play this stock now?
The stock is trading near its medium to long-term support zone. 520 to 510 is a good support range for the stock. So I think the downside for now seems to be very limited from here on. So it's better to hold on to existing long positions if any. The overall FMCG basket, the way FMCG index is placed on. So I think some pullback move in many of the FMCG names could be expected in the next 2 to 3 months. So keep a 2 to 3 months horizon and hold on to the stock. You can expect levels somewhere around 580 to 590, where you should again take a review on this thing.
Right. The next query is on Aditya Birla Fashion. Vivek has written in and he wants to know whether this stock will touch 245 in a month or so. Trading around that 218 rupees a share band, and just about off its 52-week lows of 202 rupees a share. How would you advise investors to look at this one now?
So as of now, the trend for the stock continues to be negative. We have seen a good amount of underperformance in this stock. So I don't expect any significant fireworks in the near term. 225 is a good resistance for the stock, and until the stock gives a breakout above the same, I think the underperformance is likely to continue. So I would advise, if you are looking from a short-term perspective, to exit from ABFRL and rather look to go with some better other names. Maybe Trend is a good option over ABFRL if you are looking from next 2 to 3 months perspective. So exit from ABFRL and shift to Trend. I think that would be a good call today.
Right. Trend is a better counter compared to Aditya Birla Fashion. The next query is coming in from Satya CK, and he holds 100 shares of Polyplex at the rate of 1750 rupees a share. And he wants to know whether he should switch to another one or keep holding on to this one. Stock is hovering around 1260 levels. What should he do?
To wait for some pullback move, although the broader trend is not positive, but we have already seen a decent price-wise correction recently. And it can move towards 1380, 1400 in the short term. So I think you can look to exit the stock on pullback moves towards that resistance. So wait for a pullback towards 1380, 1400 for now.
Right, that's the call on Polyplex. Let's take a query on BSE Limited. This one is coming in from Ramesh, and he wants to know your near-term target on the stock. If you look at the stock, it is up somewhere around 10% in a matter of 5 sessions. More upside on the charts, Ruchit?
Yeah, in fact, we have seen a decent correction as well from the highs which it had formed 3 or 4 months ago. And if you look at last few days, last 1 week, this price up move which you just mentioned has been supported by very high volumes compared to what we see on a daily average basis. So whenever we see such up moves supported by good volumes, I think that's the sign of accumulation going on in the stock. So you can expect levels around 540, 550 in the short to medium term in the stock. So I would advise to continue to hold on. Any declines towards that 480, 470 range can be used as a good opportunity to enter fresh longs as well.
Right. The next query is coming in on Sun Pharma. This is coming in from Kartik Raja. He says that he is holding 2 lots of Sun Pharma in the futures market at 988 rupees or thereabouts. And he also holds futures of SBI and HDFC Bank, both 1 lot. He wants to know if it's good to, or it would be advisable to hedge Sun Pharma against SBI and HDFC Bank, or exit Sun Pharma at a loss. What should he do, Ruchit?
So overall, Sun Pharma is more into a consolidation phase or a time-wise corrective phase which is going on. Even if you look at this stock compared to other pharma names which had rallied off late, Glenmark Pharma, Zydus, Oro Pharma, compared to that, Sun Pharma has not participated in this recent upmove in the pharma names. So I think this consolidation would continue in the short term since it's a futures positions. So I would say if any pullback move you get towards 990 or 2000 range in the May series, you can take that as an opportunity to exit. So I would advise this stock for a very short-term perspective. Pullback towards 990 to 1000 should be looked as an opportunity to exit. And HDFC Bank is looking positive. So that can be held on in the future segment. So overall, the downside seems to be very limited in HDFC Bank.
Right. So hope this answers your query. Moving on to a couple of queries on the banking pack that we're getting in on our feed. Arvind Reddy wants to know why Bank of Maharashtra stock is not performing even after good earnings. And Ishu Singh has a query on IDFC First Bank post its results. How would you advise investors to play these 2 counters post earnings?
So we have seen that whenever this PSU or mid-cap PSU bankings move higher, most of the stocks tend to show some pullback move. But the kind of volume action that we have seen in Bank of Maharashtra, I don't expect any big outperformance from this stock compared to the other names. So I would advise to make a switch within the PSU bank. I think better to go with some large cap names such as Bank of Baroda, Canara Bank or SBI would be preferred picks. And even if you want to go with some mid-sized names, then Bank of India I think would be one where you can make a switch. So exit from Bank of Maharashtra and look to switch to some other PSU banks. That would be my take on Bank of Maharashtra. Whereas IDFC First Bank is concerned, we have seen a gradual up move supported by rising volume. So I think even we The falling trend line breakout has been seen during this week in IDFC First Bank. So here I think I would advise to hold on to the stock from short to medium term perspective. The downside should be limited from here on. 54 to 53 is a good support range for the stock, whereas on the high side, 68 could be expected.
Right. I quickly want to squeeze in another query on HDFC Life. The numbers came out yesterday. They were inline sort of numbers, nothing to really get excited about. And we have a query coming in from Kamesh Sarma, and he wants to know, whether he should add at lower levels for short-term investment. Do you think it is worth a buy now?
Buy on dip should be the strategy, I believe. We have seen that after budget, a very sharp price-wise correction was seen. But from that 460, 480 range, the stock has managed to show some decent pullback move with good volumes. So I think the price-wise corrective phase, I think for most of the insurance stocks would be behind now. But yes, you need to have some medium-term view for HDFC Life. In short term, it may continue to consolidate within this range of 500 to 560, 550. So if we get it near the lower end of the range, 500, 520, ideally that should be a good opportunity to add on to the stock. So buy and dip strategy. Keep and add near 500 to 520 units.
All right, Kamesh, hope that answers your query. Well, with that, we are timed out on the show and we won't be able to take up any queries. But don't worry, we will be taking it up tomorrow, if not today. But Ruchit, before I let you go, share some stock recommendations for viewers this morning.
Yeah, so Nandita, what we are witnessing since last 3-4 days, a lot of cash market stocks, non-F&O stocks have been witnessing breakouts supported by very high volumes. So I think those stocks would tend to show some good outperformance. So I have a couple of recommendations from such names. First is a buy call in NHPC. Well, many PSU names have witnessed a good momentum of late. NHPC has a very low risk-reward ratio at current levels, and a good long setup has been there, where a consolidation breakout was seen yesterday. So we can go along with stop loss below 42.50 for target around 48, followed by 50 rupees. Right. So and second pick would be PCBL, that is Philips Carbon Black. So this is also one counter where a breakout from a consolidation has been seen yesterday with very good volume. So PCBL can be bought with stop loss below 118 for short-term targets around 135.
Right. So those were the stock recommendations coming in from Ruchit this morning. With that, Ruchit, thanks a lot for taking out time and joining us this morning and sharing your thoughts on stocks with us. Well, with that, we are timed out on this edition of Morning Trade. So it's a goodbye from me and the team that put the show together. But don't go anywhere, because coming up next is Opening Bell.